We are on to the next agenda item. Hold on, let me go to my agenda. Okay, so this item 2 is the subject is emergency assistance funds for tenants at risk of eviction due to impacts of the novel coronavirus COVID-19. And this was continued for a previous meeting. So do we have a staff report?
Yes. Good evening, Mayor and council members. My name is Carrie Husler and I am the housing manager. We have returned with a proposal for emergency assistance funds to support Cupertino tenants in need. All funds would be limited to 100% area median income households who can demonstrate a need based on impacts such as a layoff, furlough, or pay reduction due to the COVID-19 pandemic. The first item before you is a proposal to contribute $50,000 to West Valley Community Services to assist households with a maximum of $3,000 in funds. Please note that any funds issued by West Valley to households will be paid directly to the landlord. The second proposal is a $100,000 loan program administered by West Credit Union. The city would contribute the funds and set the program requirements, with the agreement that the city backs any defaulted loans. For each borrower, West will charge a 1% annual percentage rate and a $5 fee to join the credit union. The city will pay a one-time $50 loan servicing fee. There are no additional fees to the city. For both of these proposals, we are seeking direction on the preferred funding source. The city can fund emergency assistance funds out of the below market rate affordable housing fund or the general fund through the Human Services Grant. They're both eligible uses for these funds. In addition, the CEO of Earnin has joined us this evening to provide an overview of their financial tools to support households who are prone to debt. I will now turn it over to West Credit Union, and a presentation from Earnin will follow. Representatives from West Valley, West, and Earnin are available this evening to answer questions.
Okay. Welcome, West.
Good evening. My name is AJ Elias. Can you guys hear me?
Yes.
All right. Well, it's such a privilege to join you all and presenting what it is that we can do to partner with the city to provide some rental assistance for the tenants that are impacted by COVID-19. As we were discussing this with the city manager, Deborah, we were very excited about the fact that this is an opportunity for us to stabilize the rent in that area. Under this proposal, basically what we are saying is that we will offer, make, and service the low interest loans to income qualified Cupertino residents. Now, anything that we'll be discussing in this is again subject to the approval of the council, and you guys can amend it accordingly, because our objective primarily is to make sure that this is in alignment with what your view or vision is to provide the tenants the help that they need. The loan purpose is to provide low interest loans for up to 2 months of monthly rental assistance. And again, that's to achieve housing stability. The city of Cupertino shall place $100,000 into an MCU share account. This is going to be a collateral for a loan up to 24 months. Now, these loans that we will be doing will be fully secured by the city of Cupertino share accounts. And this should happen in the event that the borrower defaults during the repayment period. The proposed borrower loan terms is the maximum loan amount that we will be providing is $3,000 or 2 months borrower's paid rental housing payment, whichever is going to be less. The annual interest rate would be 1%. The maximum loan term is going to be for 24 months. The first 6 months, we are going to be deferring it. So the loan payment is going to be amortized over the remaining 18 months. The loan payment history shall be included in the borrower's credit reporting files as well. Now, here's where I want to make sure that this is what
Did we lose him? AJ?
Did something happen?
Yeah, I think we lost him.
I still see him there. Is he zoomed in or phone it? He's zoomed in. Huh,
Hold on a second.
he's not muted. Oh, now he's gone. Is he calling back in
Probably.
or coming back in? Okay.
Also, Mr. Mayor, I believe, well, they submitted a presentation as well, so he may be having technical difficulties, but I can share my screen if you'd like me to run the presentation.
Yeah, why don't you wait another minute and see if he manages to get back in? Not back yet. Deb, are you trying to call him or anything? I don't have his phone number, obviously.
I'm reaching out as well. You know, if it makes more sense, we can receive the presentation from Ernan at this time.
Okay, sure. Yeah, let's do that while he works through his technical problems. Who is the person from Ernan?
We have Ram.
Okay, welcome, Ram.
Thank you, and good evening, everyone. I have Yvonne from Ernan, who's also on and has a presentation.
Okay, Yvonne, you have to unmute. Okay,
Unmute.
okay,
Got it.
okay.
Good evening, council members and mayor and city manager. I'm Yvonne, and today I'm wearing a different hat than my Public Safety Commission chair hat, and I'm here on behalf of Ernan with our CEO, Ram, and we're going to go over a presentation, so I'm going to go ahead and share my screen.
Okay, we can see it.
Perfect. Ram, please go ahead.
Yeah, thank you, Yvonne. And so we have an app called Ernan. I'll give you just a little bit of history on the company and how it started. We started the company in 2013, went live in 2014. The way the company started really was when I was working at another company. I noticed that some of my employees were running into overdraft fees and payday loans. And when I was trying to figure out why, and when I spoke with one of them, the problem that she had was she needed money the next day, couldn't wait till the following Friday till payday. And it didn't make any sense to me because like she had already worked for 2 or 3 days and she couldn't have access to the pay for the days that she'd already worked. I tried to make our payroll system pay her for the day she'd already worked, and the payroll system couldn't do that. And so I did a workaround and paid her out of my own checking account. Did that for a few years, and then finally left the company. The people, and I was doing this for a handful of my employees. The people who I was doing this for wanted to know if I could still do it for them. And I didn't mind doing it because I knew all of them since I'd worked with them. And so I continued to do it when I was not in the company. I just needed to figure out if they were working or not. Initially, it was just with them messaging me whenever they needed money, and I would see if they had got paid. And at some point, I built a web form. It was a very simple web page, and when they needed money, they would fill out the form. Once I had that web form up, people who I didn't know tried to use it. And I thought that was interesting, and I managed to do it for people who I didn't know as well. And so that's kind of how it started. What I realized was that when people had access to their pay, whenever they needed it, their life was much simpler. They were paying their bills on time, no more late fees on bills, no more overdraft fees, no more payday loans. And that's when I realized that if I didn't try to make this into a product, I'd always feel bad about myself. And so that's how it started. And I can walk you through the products. We started off with giving people access to their pay as they earned it. And it's a really simple app. When every day you can see how much you've earned. And then if you want to access your pay, you basically select how much you want to take out. And then we don't charge any fees or any interest or anything like that. Our members pay us whatever they think is fair. And if they're not able to pay, they may pay us. They can choose to pay zero. The community has a really strong paid forward culture where people actually help each other out a lot. And so quite often you'll have people paying it forward. And if someone does that, then the person who was helped sends a thank you message. And we've had over 25 million thank you messages go between our members through the platform. And so this was our first product, which was early wage access. A lot of people use it to keep track of their earnings. On average, people actually open the app about 25 times a month because every day after they work, they like to see how much they've earned. Yvonne, can you go on second one? And so really our product was meant for people who are struggling financially. And we've structured it in a way that is really consumer friendly. We created it in a way which is non-recourse, which means as part of the agreement, we basically have no legal right to collect. And so the member can't pay us back. There's no fines, there's no interest. We don't put it into debt collection. We don't report to credit agencies. It's very consumer friendly. And then we've added on features as well since we started off with the early wage access. One of them is called Balance Shield, and this helps our members avoid overdraft fees. Really surprising stat to me is that as a country, we spend more on overdrafts than we do on fresh vegetables. So it's just amazing how much of overdraft fees there are. For my customer segment, 1 in 8 Netflix transactions leads to an overdraft fee. So every $100 that Netflix makes, the banks get $35 in overdraft fees. And so we built this really simple tool called Balance Shield, where we can monitor, the member can turn it on if they want to, and then we'll watch their bank account. And if their bank account goes low, we send them a push notification, and they can choose to either cut back on their spending, or if they need to, they can access their pay. The second feature that you see is rewards. This is very much like cash back on a credit card. If you have a good credit card, you get, say, 2% back. And that's like a subsidy on your purchases. My customers are the ones who need that subsidy, but they don't get those credit cards. And so what we've done is decouple the rewards from the card. And so they continue to spend with their bank or credit union's card, but we can route the rewards from the merchants to them. The third one is health aid. We've seen a lot of our customers struggle with medical bills, and it's intimidating to try to deal with that. And so we have a team that actually negotiates medical bills for our members. And so our members will upload their medical bills to us. Our teams will call the provider and negotiate typically either a lower one-time payment or a monthly payment. And then it's up to the member to decide if they want to take one of those, and then they make the payment directly to the provider. We also have a financial calendar that helps with budgeting. One of the really interesting things is the most common pay cycle in the US is you get paid every other week, but every bill is due monthly. And so sometimes your bills are due after payday, and sometimes your bills are due before payday. And so it's like someone designed the system to trip up people who have low bank balances. And so we have this calendar where you can see when your paydays are, and you can see when your bills are due, so you can see which bills are due before payday and which bills are due after payday. And the last one that's shown out here is called Tip Yourself. This is like a savings product where you can put money aside. And there's different ways in which you can do it. You can either put money aside whenever you want, or you can set up automated rules that will automatically transfer money into an account that's like a savings account that's on the side. And then whenever you want it, you can pull the money back down into your checking account. And typically when we move money, we actually move it over the debit rails. What that means is that as soon as the customer wants money, it's in their account in less than 1 second. So that's kind of the product suite that we've had. In response to COVID, we've done a few additional things. We support people who work from home now. We're building out support for people who are getting unemployment benefits. And we also have a really interesting group called Helpin, where it's kind of taken what was happening in the app where people were helping each other by basically paying it forward. And we're seeing our community members basically do that behavior spilling over to real life as well. We have one plumber who's actually offering other community members plumbing services for free if they're in a tough time. We have one person who works for an agency that helps source prescriptions. And because there's lots of shortages, she's actually helping people navigate that. We have a number of people who are helping others get through with unemployment. As you may know, in many states, there's been lots of issues with getting onto unemployment benefits. So you have a number of members who are helping with unemployment. And then we just have a lot of like people thanking each other by buying them lunch or like helping each other out through difficult times. We've had a number of members who became homeless and had to go into a hotel and then ran out of money while at the hotel. And so we've had quite often members pooling together to pay for the hotel for people who lost, who were evicted from their houses. And so we're seeing a lot of like the online behavior of people helping people spilling over into the offline world as well. And so I think what sets us apart is that we have no fees, there's no hidden costs, there's no penalties. It's completely member driven, and they have a choice in what they can pay us if they're happy with the service. And just in terms of the impact that we have, the common use cases are people use the app to buy groceries, gas, food. Rent is also a fairly common use case. It's interesting that even when you are employed, half the time your rent is actually due before payday. And many renters who face eviction actually owe less than $600. And we've seen sometimes it's like as low as $127 is what people are short and need that to avoid eviction. One of the other things that's really interesting is that when someone starts using our app, their wages grow faster than the national benchmarks as well as the local benchmarks. One of the reasons for this is their attendance improves. My customers are typically lower middle income. They often buy gas $5 or $10 at a time because they can't afford to lock up $50 in the gas tank. And if something happens before payday, then they can't buy gas and they miss work. We've seen that attendance goes up by about 2 hours per week, and correspondingly, the wages go up as well. The other thing that is really interesting is that we have visibility to what our customers are spending on. And if they maintained the same spending habits, but did not have access to our app, just our customers would be incurring an incremental $100 million a month in overdraft fees. And so we've been able to save our members a lot of overdraft fees. On health aid, we're saving our customers an average of $120. And we're seeing that most of our members submit about 2 bills on average. There's no limit on how many bills they can submit. And health aid, like all the other products, is again, we tell people what the savings are, and if they're happy and they're able to, then they can tip us something. And this is just a comparison of, I think because of the way this product is so different, our customers rate us so much higher than traditional banks. And so that's an overview of our product. We connected with the city because we have some interesting money movement capabilities where we can get money to people immediately. And we also can help find people who might meet certain criteria because we have insight into their financial life. So we know who's working, we know who stopped working, we can tell who's on unemployment. And so we can be helpful either with moving money to people or with identifying people who need help.
And I just want to add to Ram's presentation that in Cupertino, we currently have over 1,000 members.
Thank you, Ram and Yvonne. And Mayor, I wanted to offer that I can, I haven't seen AJ jump back on. I can go through his presentation on his account.
Yeah, why don't you do that?
Sure. Okay. Give me one moment to share my screen.
Is there a chance to ask a question as we're waiting for the transition?
That would be great. I could
Sure.
use the
Yeah, go.
Okay, great. So thank you for the presentation from the earning representatives. My question is, can your platform be adapted to help us with our efforts right now to have expenditures of emergency assistance to some of our residents? It sounds really interesting how you could potentially help us outreach to those that perhaps need the assistance the most. But is there any way to adapt what is a very seemingly sophisticated app to the purposes of Cupertino's emergency assistance efforts here, which I think are pretty straightforward. I mean, I would peg the number around $3,000 for assistance, and then putatively it's a loan, right? And it's nice to see that in your business model you don't go after collections, et cetera, et cetera. But is there something about your platform that could be adapted to help us administer these particular loans that we're looking to provide to the community now? Thanks.
Yeah, I think we can do it in the construct of the product the way we have it now. But if you had people you identified, we typically do it tied to wages, but we could use the platform to do it to the $3,000 limit or any limit that you wanted. The difference between what we would do in a loan is we wouldn't structure it as a loan. It would be a non-recourse product, so there would be no fees to the consumer. We would transfer the money, and then if they would like to, they can pay it back, but we would not compel them to pay it back.
I see. So essentially the answer is yes. I mean, because the funding, as with all of the ones that we're considering tonight, would be coming ultimately from the city of Cupertino, but then it would be administered through one of these third parties we're talking to, including yourselves. So what I'm hearing is that essentially, yes, your platform could be adopted for those purposes. Is that
correct? We could do it. We could not do things like charge an interest or a fee or anything like that.
Right.
First the money and we could get it back.
And I think that should align with our intentions as well. I don't think that we're looking to get interest or fees from this.
No, I don't think we're looking to get interest, but I think we are expecting the loans to be paid back. And so that's kind of the difference here.
Right, but irrespective
we
of
have the mechanism to collect, but we would not force it, and we wouldn't put people into collections.
All right, I understand.
Okay, thank you. That was my question.
Okay. All right, we ready with the Mary West presentation yet?
Yes. So
All
we
right.
are on to.
Can I
We
ask
are
a
on.
question, Aaron? Or do we do that later?
What?
I have a question for Aaron also. Do we ask that now or after the Mary West presentation?
Sure. For you have a question for Ernan, you said.
Yeah, Ernie, yeah. Ernie.
Yeah, all right, go ahead.
Okay. So it's great program, but I do wonder, how do you sustain if you are collecting no fees, no interest? Do you sustain based on public agency funding, nonprofit fundraising?
So we let our customers pay us whatever they think is fair, and that's our revenue. People are often surprised by that, and they think it's too good to be true. I would argue that people compare it to an overdraft fee, and the $35 overdraft fee is really too bad to be part of what we accept as our future. I don't think we need to charge like banks to actually have a sustainable business.
So people voluntarily pay what they think is fair. Wow.
Yeah.
So I'm wondering, you also don't force people to pay back the loans, but then the percentage of people who do pay back, what we are kind of looking at.
It's incredibly high for our core product because it's tied to the money that they've already accessed.
Mm-hmm.
I don't have a sense of what it would be if we were to give people $3,000 without them having an income over a longer period of time. But if essentially what our product does, it's like an ATM for your wages, or it's like a payroll system. So it's not like a loan system, it's more like an on-demand payroll where there's really not much of a lost concept.
So do you then require someone to have an income in order to have an account with you?
For our normal product,
lost their job, what happens then?
For our normal product, that is correct. They have to have income coming in. And if they don't have income coming in, then we're not able to give them access to wages because there's no accrued earnings. What we are building right now, but is not yet live, is we're trying to give people access to unemployment benefits.
Mm-hmm.
But what we would do with, if we were to work with the city of Cupertino, is we would not require them to have a job or income, because we would essentially be dispersing money that's coming from the city.
Mm-hmm.
Right.
Great. Thank you, great for program. Thank you for doing what you're doing.
Thank you.
Okay,
And
so we
thank you,
ready with
Yvonne.
Carrie, you ready?
Yes, thank you to Mayor West for jumping in. We now have Danielle from Mayor West, and I believe she is being promoted to a panelist and will present on behalf of AJ.
Right. Okay. How do I do this? Hello. Oh.
Hi, Danielle.
Hi. Can y'all hear me?
Yes.
Okay. I'm trying to see how I can present from my phone because we do have a slide.
Would it be helpful if we put the slides up for you? I believe we can advance.
There you go.
Okay.
Okay, great.
There you
Okay.
go.
Thank you. So we put a proposal together, and it will be able to amend it depending on what the city needs are. So we can go to the next slide. Okay, we can. Sorry.
Are the slides from Carrie or from Danielle?
I believe our video team has.
Is it
Oh,
over?
so how do we?
How do I move the slides over?
Who's gonna? There you go.
All
There
right.
we go.
Okay. So we're looking to make service low interest loans to income qualified Cupertino residents. We're looking at the 1%. So the loan provides to low interest loans up to 2 months of monthly rental assistance payments, as AJ was going over, to achieve housing stability during the COVID-19 crisis. Yeah, as the city was saying, would be putting up $100K in a Mayor West share account for the collateral for the loans up to 24 months. The loans would be fully secured by the city of Cupertino share account in event that the borrower would default in a repayment period. If we can go moving forward. With the repayment, with the loan over going up to 3,000 or 2 months power paid rental housing, whichever is less, the actual loan rate would be at 1%, just to try to cover any kind of fees with maintenance. The max loan term would be 24 months. The first payment due, we would defer it up to 6 months of the loan payments and amortize them over 18 months. So their first payment wouldn't be due until 6 months out. The loan payment history would be included in their credit reporting file. If we can move forward. Residents earning less than 100% of the area median based on the income. And this is where it's subject to the city's approval and where we have able to have some flexibility, working with the city. We're looking at the proof of income, residency for the city of Cupertino, and a rental agreement required before rental assistance. Max debt to income ratio is 60%. This is more on just company standards, where we're a little liberal, where we have a little more flexibility in working with the city exactly what you're looking for. That's where with a medium score of 620 FICO score, there is a requirement of a $5 membership fee. Just to be a members of the credit union, but they're not required to have any other accounts or anything with us with this loan. And the certification of income and housing will, depending on the size, will be required. If we can go to the next slide. Sorry. There is only a one-time $5 servancy fee for the loan. So any invoicing that we'll be also providing to the city each month, the borrowers would get a monthly statement with the payment due date amounts and any outstanding balances. Maros would provide normal servicing, including any courtesy calls if they're past due, payment processing, credit reporting, any bankruptcy if it's needed. We would also be reporting to the city every loan that's made, any outstanding balances, due dates, charge-offs, offsets, and recoveries. And any money we do recover from these loans, we would be giving it back to the city. Or giving it back to Cupertino, since we wouldn't be deducting any of that money because these loans are being paid. If there report. We would give you a monthly report, and as well as a charge off if there was any debt after 60 days of the offset off the city share account, and anything that we do get back, we would debit back to the city. It's a roughly what we're looking at the proposal. Hello, sorry, I think I went a little fast.
No, that's good. So I have a couple of questions, and then we can go to the other council members. Hold on, let me find my notes. So you already told me the qualifications. So what I was kind of thinking, I had been thinking about this, what kind of loan program a lot and how to do this, recognizing that it takes time for people to get back on their feet. But I had kind of thought we would start like the first month, say the payment is $5, and then the payments kind of graduate up until they reach the plateau. So it's something that is not, not something that anybody could not afford. But instead of no payments for the first 6 months, there would be some low payment for the first 6 months, just so they got used to making this loan payment every month. And I don't know what, if you're sending a statement each month with the amount that they owe, maybe that would be workable. So I don't know.
And that's something we can work out, definitely. And this is just a proposal, and this is where we're coming to the city council and coming to you to see what you would want and how we could amend it and work with.
So a $3,000 loan and a $50 servicing fee, that's like, that's more than 1% of the loan and servicing fees. And that's something the city would have to pay. It wouldn't be added to the loan amount, or how does that work?
That we would be invoicing the city separately, but that's something that we can sit down and work it through.
So normally do your loans have servicing fees? Like if you had a car loan or whatever?
Well, normally it's put into our interest rate, since we're offering a lower below prime rate at 1%. So we wouldn't be getting anything out because we have the interest rate so low.
Right. Okay. Fair enough. Yeah, those are the questions I have. Let's bring it back. I don't see any other raised hands. Darcy, do you have any questions? Oh, Rod, go ahead. I see you waving your hand anyway.
Thank you. I didn't quite get to this button in time. I actually think that this is really smart. I think this is cost effective. And yeah, I really appreciate your flexibility. $50 to originate a loan is quite frankly, given, the paperwork that needs to be done is very little. I think that you're waiving interest for the first 6 months is terrific. So if I say, let's pick an arbitrary number because we're going to get to part of this, the other part soon enough.
No, waiving payments, not waiving interest.
Yeah.
Okay.
Help me out here. Was it waiving? Are you waiving the interest
Waiving
for the
payment
first
for 6 months?
We would be waiving the payments for 6 months.
Okay, fine. So, all right. So I get about, let's say that with this program, right, the overhead is for the first 6 months. Let's say that's how long this thing lasts. And, people who are renting in Cupertino probably had a job or some real income before this crisis. And now we're positing that they don't. The $3,000 has $50 contributed, say, by the city, and another $15 in interest at 1%. So that's $3,065. If we then take that and divide it, $50,000, say, by this, we can service 16 homes, 16 homeowners, or I'm sorry, 16 renters, right? If we recover, say, half of that, we're looking at so in other words, let's assume that the default rate is 50% and the other 50% pay. those loans back. Those funds could be then available for others. We are servicing now on the order of 30, 31 total homes. If we recover 2/3, that is the default rate is a third, that series comes down to about 46, 47 homes. So I think there's a lot of leverage in this program, and I think it's actually among our options the easiest enough to understand and makes whatever monies we have go further. So I think the Mary West program is very good. It comes with a very low overhead of the $50 plus one is what? That's 2.2. If you're looking at it over a 6-month period, it's a 2.2%. So I think it's a terrific option that's well understood by an institution that is in the business of doing this. So yes, they have access to credit and information and other things, and is the most cost effective in my mind. So thank you.
Okay.
So Danielle, are you done with your presentation?
Yeah. Any other questions or anything I can go over you might have?
I'm sorry.
Hello, hi. So can I go next?
Yeah.
Hello?
Hello?
Yeah.
Yes, go. Sorry.
So, question. Thank you. It's a great program. So I'm curious, how do you decide $3,000 and is that enough? And can they only use that for rental payment? Because there is already rent deferment that they don't have to pay for the next 6 months, right? So then what would the $3,000 do for their particular situation? And then also second question is, would you be checking for employment potential or employment history to be sure that this person will have a good potential to pay it back?
These would be more of the parameters that the city would want to put into place, because this was brought to us as a rental assistance program. So we put together that these funds would be specifically.
So these are conditions the city can add if we want. We can.
And because it was specifically geared for rental assistance is where it was brought to us. So that's how we geared it up. And we were saying the max amount would be 3,000 is what we were told. So that's where we're keeping it at.
So the 3,000 was the number city gave you.
This is
okay.
So I'll tell you how that number was derived.
Current.
I'll tell you. I'm sorry, it's hard to hear
Yeah.
me.
Yeah, it's harder to hear you.
Yeah, I'll tell you how's that? Better or worse?
Yeah, it's fine. Go.
Better.
Okay. So that number was derived because we took an average from a couple of different programs. One was Mountain View. One was forget the name of the one at Santa Clara County. Either one, the cap is approximately $2,700 to $3,000 per family, or per household. I'll put it that way. And so we set the amount at the similar level, and the action given to me by council was a renter's assistance program.
Okay. But the West Valley program used to be $12,000, right?
That used to be 10.
10,000, yeah. And
we'll cover that one next.
Yeah, at that time I thought, well, that's too much. But then it seems 3,000 is that enough? I also wonder. But then also, so they can only use this for rent, or is there no limit? They can use it to cover other expenses. That's for us to decide.
Well, I was actually to bring back a renter's assistance program.
Right. So this money would not go straight
only for rent.
It would not go straight to the landlord, the payments, right? The money goes to the borrower.
The person. Yeah.
Correct.
Uses it
Yeah,
for,
so
and they may use it for any purpose then, because
right,
we need to want to check.
But this, if you looked at the slides, this is not income is required to get these loans, as is a moderate FICO score. 620 is not a difficult FICO score to achieve. So this is not a grant of any kind. You would
Oh,
have
they
to
need the FICO score to achieve that. So
What?
you mean they need to have satisfy a certain FICO score to achieve to get the loan?
Correct.
620.
Well,
But they may not have a job right now, but then they may have a good history.
no, I don't think if they didn't have a job right now, they would not qualify for the loan.
Is that a requirement of the loan?
Well, we can set that, but I would not. I mean, there'll be
That's
other
my
money, and we're going to
question.
talk about that next in terms of grants.
Yeah, that's my question. Do we want to have make sure that they have employment potential, or make sure they have employment? Maybe they're just for loan, and they just need to. I don't know.
And
I'm just
employment
wondering.
potential would not be sufficient to get a loan. They would have to. It's almost like the earn-in thing. You have to have income to their system.
So what's
So
my
the other
question
money
is-
available for grants for people that don't have income at all.
Yeah, so I'm just wondering what exactly will be our requirement for the people for this program. Do you already have something in mind?
Well, she had it in the slide. The FICO score is 620 and proof of income.
Proof
I don't-
of income could be bank income or employment. That's my question.
I interpreted the proof of income to show that their income must be less than or equal 100% of the area median income to make sure they're low income, not that they actually currently have income, but that might be something for the bank to clarify.
I'm unclear.
Yeah, can you put those criteria back up? I know those are such.
Then employment history that they have made income in the past, so that we know there is potential to make the same income, or they have to have that income level of income now, and less or equal to could be anywhere, right? So I'm very unclear on that.
And I'll note there is an attachment to the staff report that has a more detailed proposal.
Right, so proof of income, but right, it does not specify the type of income, whether it could be unemployment insurance or what.
Is the Mary West representative still with us?
Yeah, I'm right here. I'm still here. So with the proof of income, it was for the median income proving that was for low income. But like all these parameters, we're flexible in adjusting on how the city would like to have it run as well. So if you want to make sure that they are able to, we can. And this is where we have it open so we could see what would work.
Okay. Right. Yeah, I don't really have a strong preference one way or another. I just want to clarify.
Right. And like I said, this would be one of two programs we would still in the next item. We will discuss money for grants to pay back grant. And I don't know if they could qualify for both of them or how that would work. Probably they could.
Could I suggest that we move to the next?
Right, unless anyone else wanted a comment. I don't see anyone else hand raised here. Okay, yeah, so let's move to the next, to the west, wait, hold on, John has his hand up. Okay. John.
You're on mute.
I keep on muting him, but okay, there it goes, okay.
Yeah, I just wanted to clarify. I thought I was hearing in the presentation or in the comments that it was 50,000, but our agenda, it's 100,000, correct? Which one?
It's 50,000 is the next thing we're going to be considering. It's 100,000. It's just a number. Again, council can also modify all those numbers that are.
Right, the loan program is 100,000 and the grant program that's being proposed is 50,000. They're two separate things.
Two separate things.
And they're not mutually exclusive. We could do both, we could do neither, or we could do either.
So I'm still a tad bit confused. You know, line number 4 in our agenda, it says the 100,000, and it says funds to Mary West Credit Union. And that's why I'm confused.
Well, no, the 100,000 is if we do the loan program.
Right.
The
So
50,000 is if we do the West Valley Grant Program. They're two
and
separate.
what I'm saying is we were just talking about the loan program, but in the comments, I was hearing the number $50,000. So clarifying, we just talked about the loan program to Mary West. So the number is 100,000?
Yeah, I'm sorry. I'm sorry for the confusion. I used 50,000 as a basis of comparison on overhead, right?
Right, okay, yeah, okay, now I got it.
So the amount is up to the complete, the amount for either one of these programs is, as Deb said, is completely up to the council. So.
Okay. Right.
Okay, so that was a clarification.
Yeah,
So
that was the source of confusion.
the intent then was up to 100,000 for the Mary West loan program.
Correct. Although
Okay, great. Okay, I'm clear. Great. Now we can move on.
Darcy, you had your hand raised.
Yes, I have a question that's related to that for the Mary West presenter. So how much money would be required if there is a minimum in order for this to be workable for you? So is 100,000 required, or could you get by with 50,000 or even 30, or, you know, is there a minimum amount that you would need to administer this proposed program?
I would have to, with Mara West, is that where you're asking us if we would be able to do it with less than 100,000?
That's correct. I'm asking if you could do it for 50
Yeah.
or, you know.
I would have to just speak with my lending department, but I'm pretty sure we would be able to. But I would just contact my VP of lending and just to make sure, because it was proposed with 100,000, but we can always work and see what we can do.
Okay, understood. Thank you very much.
Okay, let's see. No one else has their hand raised. Okay.
Mayor Sharf?
Yes.
Yvonne, are we able to address one more comment?
Sure, go.
Okay, please go ahead, Ron.
I was just going to say that, I mean, I think if you would like to, we could also help out with dispersing the money and collecting it back. Our platform is super efficient that, like, we wouldn't even charge for this. We would just give it and take it back with no fee and no interest. I mean, to me, it's a very small number of people. It's 30 people. We're doing more than that every minute with no human intervention. That this would be, this is to us like just a very trivial thing to execute. That would be more complex to charge people than to just let it run.
Right, I understand, except on your I mean, with the Mary West program, they're expected to make payments every month after the first 6 months. And if they don't, I mean, there are some repercussions. I mean, they're probably not going to go to, you know, collections, but, you know, it would affect their credit score and all. And I understand with your platform, you know, it's basically optional to pay it back. So I'm not sure how that would work.
Yeah, we don't take the legal right to collect, but we do set up automatic payments for the money to come back.
I see. Okay. All right. Thank you.
Well, let me ask a follow-up to that. So looking at all of the details of the program that Mary West is proposing, would you be able to replicate those in a program that Earn-In administers absent the loan interest rate requirement?
Yeah, I mean, we could be super flexible on how it's set up. We could do it based on income. We could do it based on employment. We could do it based on like level of income, how long they've been employed. We could give the money over months if you wanted to go specifically to rent. We could start the collection after someone gets a job if they're not in a job right now.
Okay.
It's super easy to do. The only piece that we won't have is we won't have the credit score, but we'll have income.
Right, right. But you also have a book of prospective people that you can outreach to that might be
Correct.
Good, you know, audience for this this assistance. Okay, thanks very much.
Thank you.
So I also have a comment. Actually, I think the earning program could complement the Mary West program. I see that in the attachment, they will be collecting late fees, and so this might add up. So, but then the earning program can help mitigate that, help for the renter, for the loan for people. That might be helpful. I wonder maybe the fee collection could be separated, but then we can encourage them to use earning to help with financial planning. Yeah, okay.
Okay, can we move on now to the next report for West Valley, or for the grants?
Sure. So, Mayor, we have some information in the staff report that's come back from digging deeper into the funds for West Valley that I can highlight. We don't have a formal presentation, but we do have West Valley staff here to answer any questions. So basically, West Valley has been able just to provide an update. They've been able to source food from new channels and have expressed the desire to work with Cupertino on an emergency assistance fund program for tenants. That's their immediate need. They're seeing a spike in calls and needs. And so they would be able to serve households up to $3,000 based on the city's desire at 100% AMI with a $50,000 contribution, and they proposed a 10% administration fee. And this would go to households in the West Valley region. And they're, they've been more than willing to work with Cupertino, and they're here to answer questions.
Okay. Hold on. Okay. Josh, did you wish to speak?
Yeah, thank you, Mayor and council members and city manager. You can all hear me, yes?
Yes.
Thank you for all taking this consideration, both for our proposal and for the proposals from Mary West and Ernan. I'm grateful for the compassion that you're showing for Cupertino residents who are struggling in the face of COVID-19. Just to give you a little bit of additional context of what we've been seeing at our agency, since March 1st, we've had 33 new Cupertino clients come to our doors for rental and food assistance. Of that number, 17 have specifically asked for rental assistance due to lost wages or loss of income. We're largely seeing people who have lost jobs in the service and gig economy. We're concerned, as I'm sure all of us are, about the speed at which those jobs will recover. And these are folks who typically live at 60% or less of area median income, don't have savings, and don't have anything, any ability to pay future rent. While the moratorium will keep them, the moratorium on evictions will keep them housed for the short term, we're concerned about them falling many months behind on rent. That rent will come due at some point once the moratorium is lifted. And we want to do our best to keep folks up to date on rent. We anticipate that as long as the stay-at-home order is in place, and as long as our restaurants, our taxis, our stores are impacted in terms of their ability to operate, we will continue to see requests for rental assistance much higher than in previous years. Just to give you a more global perspective, we've had 184 total requests for rental assistance in the West Valley since March 1st, which is a 200+% increase year over year. So as Carrie mentioned, for us right now, rental assistance is the biggest concern for our clients, and we're grateful for your consideration as it relates to providing assistance to folks who are unable to pay their rent.
Okay. Do we have any questions for Josh? Yeah. So the 10% administrative fee, are you hiring more staff? Is that why you're taking that 10%, or what's going on?
We've had to, because of the volume, Mayor, we've had to bring on additional temp staff to process the volume of applications for rental assistance that we've received, yes.
Okay, thank you. Darcy, go ahead.
Okay, I think this is a severe problem. And my question for you, Josh, is if we were to increase this allocation from 50 to 100,000, could West Valley make do with a lower percentage, such as 7.5%, as opposed to 10?
Yes, Darcy, we are open to having that conversation.
Okay. But so just to give the number, 10% of the 50,000 would be 5,000, and 7.5% of 100 would be 7,500. From what you understand, here, is that something that would be sufficient in order to administer that second 50?
If I understand you correctly, in terms of the incremental cost of the additional rental assistance dollars, yes.
Okay.
I said yes, absolutely.
Wonderful. And my second and final question is, do you anticipate a need for that in our community for an additional 50,000 on top of the 50 being recommended by our staff here?
Based on what I'm reading in the paper and our concerns about the long-term prospects of the return of the job market, specifically the service and gig sector, yes, I think this is going to have a protracted impact on low-income households that is going to extend far beyond when the shelter-in-place order is lifted.
Okay, thank you very much.
Oh, Darcy, I wanted to ask one other question, and I think it's related to what you said about our community. So the money we're giving is for all the West Valley cities combined, right? We're not saying that this money is only for people living in Cupertino. Is that true or not?
That is how it was proposed to us, Mayor. We are open to the city to consider that those funds being allocated specifically for Cupertino residents. I think that related to the direction, I don't want to speak on behalf of our city manager, but some of the work that our city manager was doing to advocate on behalf of the clients in broad strokes with the other leaders of the West Valley cities and towns.
Right.
And I believe, just for clarity, I believe that was the thought with regard to the discussion at the West Valley Mayors and Managers meeting, that while you have all the cities kind of coordinating for renters assistance with West Valley Community Services, that the pool of money that was gotten would be then for West Valley families in need.
Right, and I think that 50,000, we kind of looked at all the cities and, the relative size. I think we are the largest city of those five, and I think we are giving the most. Personally, I would do the 50 and then come, if necessary, come back and look at what else we could afford. And also based on the amount of money we're getting from the federal government. And Carrie, you can comment on that. I know initially someone said it shouldn't be used for rental assistance, but some cities are. And Carrie, when will we actually get that money?
Sure. So we're talking. Thank you, Mayor. We're talking about the additional community development block grant called the CARES Act allocation, and the city received notice on April 1st that we would be receiving an allocation of $229,000, and we anticipate receiving that in 45 days from the notice. So I would say mid-May. And to follow up on what you said, Mayor, we have explored using this as an emergency rental assistance program and have found that many cities in Santa Clara County are doing so. And they are using it on top of city funds that they've contributed. And West Valley has expressed an interest in expanding an emergency assistance program, and they currently offer one. So
what else could that money be used for besides rental assistance? I mean, what are other places?
Sure. So it's used for overall COVID-19 impacts. And so it can be used for public safety, small business. It can be used for vouchers to house the homeless, to assist with the control of encampments. And so, yeah, there's a few eligible uses. It just has to go to low-income residents of your community. And another use is for food as well.
Right. So it could be used for encampments.
Yes. So this is because it has so many uses and it kind of came in late. That's why I wanted a full discussion by council on May 5th, on the May 5th agenda.
Okay. Yeah, I mean, I certainly would be willing for some of that money when we discuss it on May 5th to go for additional funding for West Valley for the rental assistance. And if, if we did that, if we did the 50 today and the 50 on May 5th, could we still get, well, we would expect the 7.5% overhead instead of the 10%, because frankly, I think 10% is a little high. Anyway, I see two other hands raised. Josh, do you still have your hand raised to talk again, or what?
If I can just add one more thing, which I neglected to point out. We received a large number of requests from folks who are living in Cupertino's BMR housing.
Okay.
So that's important for the city council to know as well.
Okay. Let's see. Anyone else? Leon?
Mute. Okay. Hi. So I'm wondering, so this will be collaborative between all the cities. We are not allocating 50,000 only for Cupertino residents, right?
Correct.
And then I'm wondering what other cities are contributing and how is the dollar amount decided? I think what Darcy proposed makes sense. But if we are all collaborating, then wouldn't the fee be reduced from 10 already, since the collective might be over 100,000?
Yeah, so the other cities are a bit smaller than we are. We're probably the largest of the smaller cities. And to this date, there's 2 other cities that have gone ahead of us, and there's, I believe, 2 cities behind us. So Los Gatos, they allocate approximately $40,000 to various community service organizations that their council has decided to contribute to. One of them was West Valley Community Service for $10,000. So they received they've allocated that already. And the other city that has already decided, I believe, is Monteserino. Their council voted, and of course, Monteserino is quite small. They've allocated $5,000. The city of Saratoga and the city of Campbell are just a hint behind us, with the city of Campbell going on April 30th. So we're all kind of grouped together, which was kind of the thought about having this discussion today with our council. And so that's what we know.
And so we don't know what they might be proposing.
I have a hint about Saratoga's, but I do not have any real idea about Campbell just yet, unless Josh does. I don't know.
I know Saratoga's waiting to see what Cupertino does before it makes a final recommendation to the city council. And I just want to clarify, Campbell, while part of the West Valley, is not served by West Valley Community Services for most programs. So any contribution given by the city of Campbell will go to their service agency, which is Sacred Heart Community Service.
Ah, okay.
Are you positive? Because there's 3 city managers kind of talking. I was in that discussion, and there may be something coming.
We don't serve outside of RIDE. We don't serve those zip codes, Campbell zip codes for rental assistance.
But you serve Sunnyvale and Mountain View, right?
No, Sunnyvale Community Services serves Sunnyvale, and CSA Mountain View serves Mountain View, Los Altos, and Los Altos Hills.
Oh, okay.
They have their own.
Okay, so one more thing is and this is for, I guess, the other city manager. So the earning. So we had heard the presentation from earning, but I don't see them as part of the recommendation for funding. So are we considering providing them certain funding to provide as loans for our residents too? That's no fee, no interest. That is completely up to council. Is that something? That's all council decision. So there's the amounts that are also in the staff report are just gut level recommendations from me or things that I've heard from council prior. So I kind of just put amounts in. You can certainly move those around and decide
some level of things. The other thing I've done is I forwarded Ernan's information over to Josh for his consideration as well with his clients. So, they're already, he's already reviewing kind of what's going on there, and hopefully we can make a connection.
So are we aware of any other cities partnering with Earning to provide loan program?
I am not aware.
No,
Because
and they
said
don't.
They have 1,000 members in.
And they don't provide loans anyway.
I thought they do.
No.
They do. They said they provide loans. They don't charge interest. They ask people to voluntarily pay it back. I thought that's a very interesting model. If they have 1,000 members in Cupertino, there might be a need. I wonder we should consider funding. Do we still have earnings?
Yes, Ram is still there.
Yeah. Can I address the piece about a loan?
Go.
So a loan is it's a term in the financial regulations by which you have to, it's a certain set of regulations. If you try to conform to that, you take the right to collect, which means you can send it to collections. You report on their credit score, which means if they don't pay back, it would adversely affect their credit score. We didn't want to get into that kind of position. So while we do give people money and we take it back, we don't report to a bureau and we don't send it to collections, which is why it can't be called a loan. It's more like an advance. So if you were to give your friend money, it feels a little bit more like that, and then you take it back. And we don't just give money because we have to give it and take it back and then give it to somebody else. So the normal operations is that we give people money and then we take it back through a debit from their bank account.
So what are you looking for from Cupertino? What kind of partnership are you expecting?
Yeah, so we came just to help. We're not looking for any revenue from Cupertino. We're not looking to charge Cupertino residents. We just thought, because we already have a platform, we have a number of Cupertino residents who use it, we can help disperse it and we can help collect the money back. We're not looking to make any money or service fees off it.
Oh, so you are now looking for us to provide maybe some loan program you can use your platform to give advance to members who might be Cupertino residents, 1,000 of them, right?
So we already do that to the Cupertino residents. We're not looking to City of Cupertino for capital for that. If City of Cupertino would like to give some certain people more money, not tied to how much they've earned, but maybe for rental assistance, we can facilitate that because we have the technology already built out. So if you wanted to disperse money to 30, 50, 1,000 people, we could disperse it and we could debit their accounts automatically and then remit the money back to the city. We're not really looking to make any revenue off this.
Okay.
I know you're not looking for revenue, but I'm just wondering, are you looking for program partnership?
Yes, Ling, just to answer your question, the short answer is yes. We were approached that if the city would provide the funding, then we could easily and efficiently administer this fund to Cupertino residents, as well as regionally, if that's what you all decide.
So it could be like very small amount of $500 that benefit many people.
It could be any amount, yes.
Yes, totally.
Okay, Rod, would you like to go?
Yeah, thank you. Thank you very much. To follow up on the point I made last, I'm in support of taking however much money we think we want to provide out of our general funds for rental assistance and putting into the Mary West program. And it's for these reasons. One is overhead, but beyond, because it's on the order of 2%, not 10 or 7.5 or anything else. The other thing is, if people have the ability to pay back, we are more likely to be able to recover funds from those who can. I realize there will be a number who can't. And we can set whatever criteria we want. We could even say you don't need a credit score, right? I suppose we could, in theory, lower the bar as much as we want. The Mary West people seem to be very flexible. And I would point out, with a recovery rate of, say, 2/3 on the loans we make, we could, with the same amount of money, plus the fact that the overhead's a little bit less, we could serve 3 times as many households. If you take a look at what's been going on in Mountain View, the city council allocated a lot of money. That ran out, and then they allocated and allocated again. I think they're now north of $1 million. Our finances are not what Mountain View's is, but all I'd say is, I'd like to see us maximize the number of households we can serve for a given amount of money. If that's $100,000 with WVCS, that's on the order of 30 clients, maybe a little more if they're willing to go down on overhead. But with Mary West and the 2/3 recovery rate, we could serve with those same funds 94. If we want to allocate 150, that's approximately 45 with WVCS and 141 with Mary West. So that's the basis for my interest. We're getting more than an app, right? With a credit union, it's an institution that is a well-known, established in the city, who is in this business and can qualify based on whatever criteria we set. So that would be my suggestion. And I'm good with any amount up to what staff is recommending here, up to 150,000.
Okay.
I would just allocate it differently.
Before we go to Darcy, I want to ask Carrie, the money that's coming from the federal government, which can be used for rental assistance and other things, what about loan programs, or would that not be appropriate? Because technically the loan program, we're getting all the money back anyway if no one defaults.
So I haven't found that loan programs are an eligible use of the CARES Act funding, but I've been looking into that. I believe it's immediate grant relief. It's meant to be a boost to our residents.
So I understand where Rod's coming from, and I agree with that. However, because we have that other pot of money coming in, I think we can use that money for the West Valley program. And while we're using the money that can't come from the federal government, we can use that for the Mary West program and, maybe get the best of both worlds there. Darcy, you had a question.
I think that's a fair idea. Yeah, if we think that's coming.
Yeah, my first question is, are there any members of the public on this item?
There are.
Okay, I would prefer to wait until they
Okay, yeah, we can let them speak now. Okay, I see one hand up, Connie Cunningham. So welcome, Connie. I'm unmuting you. Don't mute yourself again. Connie, go.
Okay, thank you. Good evening, Mayor, Vice Mayor, Council Member, City Manager, and staff, and everyone in the room. My name is Connie Cunningham, a resident of Cupertino, Housing Commissioner, but it's for self only. I am speaking in support of the city staff proposal for emergency assistance. I do urge you to approve the actions that they recommend. It has been 5 weeks since deliberations began on the items on March 24th. City staff has examined a number of very good ways to put the city's funds to work for people harmed economically by COVID-19. I did have a few questions. I have 2 questions for Mary West. My first question was that in the Mary West loan requirements, why are taxpayer identification number prohibited? They said they would only take people that had social security numbers as opposed to taxpayer identification numbers. And that's not consistent with California's position on ITIN for TIN numbers for paying stimulus checks. Governor Newsom set up a pot of money to directly address that omission in the Federal CARES Act. So I specifically would like them to address that. And then the other question I had for Mary West, they were talking about standard late fees. I was wondering, how much are those standard late fees? And will these standard rates be proportional compared to the small dollar value of the loan? If the normal late fees on a much larger auto or mortgage loan is used, then it will be way too much for a $3,000 loan. So those are my questions for West. Then I wanted to just say I thought Ernan had a very interesting program, and hopefully it can fill a gap that is not covered by grants or loans. And then my final question is for this next extension of shelter in place. They just extended it through May, the end of May. Therefore, rent, which people cannot pay because they don't have jobs, will be for 3 months, April 1st, May 1st, and now June 1st. So I was just wondering about being able to do that extension of our program. Because both of the programs that I read about are designed for a shelter in place order ending April 30th. I urge you to support this proposed plan that helps vulnerable citizens of Cupertino with grants and loans, and then that very interesting other thing that Ernan has put in place. And can they answer other questions tonight, or how does that work?
Sure. If Mary West can answer the question about the social security number, did you say?
Yeah, there's they say right in their loan paperwork that they will not accept people that don't have social security numbers but do have tax identification numbers.
Okay. Is Mary West still here or not? Maybe not.
Hi. No, I'm still here. Sorry. Hi. So with Maris, with our credit union, with our criteria for our lending, we can't use an I-10 number for lending purposes, only a social security number. But this is also a question I can defer to my lending department that could further answer those questions if this was something that you were looking into with an I-10. And with the fees or late fees, this is something that we can also work with our lending department. It was just a general proposal that we had put together, but we're able to flexibly work something out with the city as well.
Okay, don't you need a social security number to join the credit union?
No, you don't need a social security number to become a member of the credit union, but for lending, in order to do lending, we do, because we need to pull a credit report.
Oh, right. Okay, that's right. So you couldn't pull a credit report on someone if they didn't have a social security number. Good point.
Yes.
I didn't think of that.
So that is why.
Right.
But if we are willing to be flexible on the credit rating score and all that for these loans, could that not be something that is not as important for these particular set of loans?
And this is something we would just reconvene with our leadership team and our lending department with our and kind of go through these criteria and seeing what we would be able to do.
So, I mean, wouldn't anybody that has a job also have a social security number? Why would you not have one?
Yeah.
Okay. All right. Was there any other question you had, Connie, that wasn't answered?
Yeah, well, no, I guess she did say that she can get back with her leadership on those standard late fees, because I didn't know, it just said they would use standard ones, and it seemed that they didn't have to use standard ones. These loans aren't standard. They're maximum of $3,000.
Yeah.
Right.
When we just did our proposal, we just did a general, a little liberal on our lending criteria, but it was general. So this is just something we could work out.
Okay, thank you.
Okay, thank you. Was there anyone else that wished to speak? I see two other people, but I don't see their hands raised. I see Jennifer and Kitty Moore, but with no hand raised. Okay, so seeing no more public comment, why don't we bring it back to council? And Darcy, you wanted to go, I think.
Yes, I will ask my question. And I was listening to what the CEO of Ernan was saying. It sounded like a legal requirement with regard to classifying what they would do as not a loan. And so how would it be described if you described it? So for instance, in the sample proposed language for council action that staff gave us, they refer to the Mary West program as a loan for renters assistance low interest loan program. If we're looking at essentially identical requirements for an earn-in program, but without the interest and without the technical classification of a loan, how would, in your art, in your field, how is what you would do described? Could it be just described as a no interest and no fee renters assistance program, for instance?
You could totally describe it like that. The term that we use on the early wage access is it's a no recourse advance. And that's what we call it, an advance instead of a loan.
Okay, a no recourse advance. Okay. Okay, I'm ready to bring a motion. You know, with understanding that we have Rosenberg's rules and, you know, it's subject discussion and even other motions, let me preface it before all the verbiage comes by saying what I'll be doing on a broad level basis in terms of the proposal.
Can we
Darcy,
go
on,
through
John.
the rest of the council before?
John has his hand raised now.
Well, yes, but procedurally, we're at the point where we have already heard from the public, and the proper thing to do would be to bring a motion for discussion purposes, as well as you know, potentially having other motions brought forth. So that's what I would request that we do. I'm not saying that we have to vote on it immediately, but
well, I would appreciate if we just let John speak first before you do the motion. I mean, if you're willing. John, go.
So my question is pertaining to West Valley Community Services. I don't think I quite understood what their program is. It did sound like they would grant or loan up to $3,000, but I'm not sure. You know, it sounded like it's really their need is for rental assistance. Could they go through kind of the details of that? What would be their requirements for the person that comes in and asks for it? What is the amount, the criteria? Is it a grant? Is it a loan? Can we get some more clarification on that so we know what the...
Go ahead, Josh.
Thank you, Councilmember Willie. Those are great questions.
Staff report.
So to clarify, this is not a loan. And I think it's great that we're trying to maximize limited resources, but our experience working with the clients we typically work with is they do not have the capacity to pay back loans in the future. These are folks who have little to nothing in savings and are out of work and have other bills. So we're helping the folks who are the most financially in peril. When a client, when a person comes to us for financial assistance, this information is available on our website. They have to bring documents to be reviewed by our case managers, includes photo IDs, and their current rental agreements if they have one, their PG&E bill from the last 30 days, a proof of income if they have one from the last 30 days. Then we verify we have to have verification of what their emergency is. And typically we look for proof of ability to pay moving forward for rental assistance, but we're in a bit of an unprecedented time. And so we are more relaxed on that because in many cases we're seeing clients come back to us because they still don't have the ability to pay. If they didn't have a job in April, they've still been able to find employment in May and are still needing support. And whatever their current bills and debts are, these are reviewed by our case manager. We reach out to the landlord to guarantee, for a guarantee that these are legitimate information. So we do all the due diligence. We work with the clients on budget. We sign them up for any type of public other assistance that they're available. And then once their assistance is approved, the check is made out to the landlord and mailed to the landlord for payment of the rent. That's sort of the condensed process fully for clients. Clients have to fill out an application so that we have all the information in-house and can review it and vet it for accuracy. Does that answer your question, council member?
Pretty much. Kind of continuing there. So when they came in and let's say that the rental shortfall on their part was say $1,000, and they came in and said, but I really need $2,000. I mean, how does that work? I mean, if they're if they have no money in reserves and things like that, I mean, maybe a little bit of administration on their part is needed. Okay, we'll take care of so much this month versus next month versus the following month. How does that work? Or why wouldn't they just come in and say, well, is the maximum amount $3,000 per person, or is there a maximum amount?
That is a complicated question. For the purposes of the amount of money we're talking tonight,
yep.
The amount out of this fund would be $3,000. We would likely, if needed, I'm answering your second question first. We would likely, if needed, leverage additional funds of that we've received if a client for a second month in a row was unable to pay rent and we needed to keep them housed, because our goal at the end of the day is to keep as many people housed as possible. Now, your first question was, if a client came to us and all they needed was $1,000 for their rent, then all that we would pay their landlord is $1,000 for their rent. In some cases, we can leverage other funds if they're 4 months behind on their, let's say they're 4 months behind on their PG&E bill. And they need that. Or let's say their car has broken down and they need a repair of $750, but this is the vehicle that they need to get to work. We might leverage other funding sources, not the funding we're talking about tonight, to keep someone so they can keep their employment. I'm just giving you sort of a more global perspective of the different ways we look at how to help a person, because ultimately we want to help someone become as self-sufficient as possible. And because we don't have the capacity to have people come to us month after month after month to receive rental assistance. Outside of the emergency we're seeing right now, typically there is a cap of anywhere between, I would say on the low end, $1,500. Occasionally it's been as high as $7,500 or $10,000. If it means that if we can get them flat, then moving forward, and that's one of the things we look at, moving forward, are you able to be self-sufficient? If we can clear back rent and back PG&E bills so that moving forward they are whole, then that's what we do. And our analysis has shown that 95% of households are still housed a year after receiving rental assistance, following the system that we put together to help keep them in their homes. John, I think you're muted.
Thank you for the additional clarification. Sounds good. I really appreciate that you are really focused on kind of a mission there, and that is how to help the people. I do think the Mary West program is a real good program, but I see that your program is more focused on the family, focused on keeping them housed, as opposed to more of an assistance on with a loan amount that may cannot come back. And so I think they're two very different ways to help people, and probably two very different, what's the right word? Probably two very different types of residents that need the help. The ones that are really scraping by versus the ones that are just a little bit challenged with the COVID right now. So thank you. I see that there's merit in both programs. And so now how do we, do the right thing for our community? So thank you, Josh.
Hey, Darcy, do you want to bring your motion now?
Yes, I will go ahead and bring my motion.
Thank you for waiting.
Absolutely. My sense of it is doing the right thing is doubling the staff recommendation in terms of the allocation. And this is
for which one? For both, or?
I'd like to double West Valley to 100 and 7.5% as an admin fee. Keep Mary West at 100. And because Ernan is willing to do the identical terms, except for the interest, allocate 100 for a similar program that would be a non-recourse advance. I will bring the motion. There are 7 points to it. And I'll just, I'll look back and send it to the city clerk if it does get adopted. I move that the Cupertino City Council, 1, adopt resolution number 20-040, contributing $100,000 in emergency assistance funds to West Valley Community Services, $100,000 in emergency loan assistance loan funds to Mary West Credit Union for tenants in Cupertino at risk of eviction due to impacts of the novel coronavirus COVID-19 epidemic or pandemic, and $100,000 in emergency assistance non-recourse advance funds to earn-in for tenants in Cupertino at risk of eviction due to impacts of the novel coronavirus. 2, approve a $100,000 contribution from below market rate or BMR affordable housing funds or a, if available, general fund human services grant or HSG funds to West Valley Community Services for emergency assistance funds to assist tenants in Cupertino at risk of eviction due to impacts of COVID-19 with a 7.5% administrative service fee. 3, authorize the city manager to negotiate and execute an agreement with WVCS. 4, approve a $100,000 contribution from BMR AHF or, if available, general fund human services grant funds to Mary West Credit Union for the Renters Assistance Low Interest Loan Program to assist tenants at risk of eviction due to impacts of COVID-19. 5, authorize the city manager to negotiate and execute a $100,000 contract with Mary West Credit Union. 6, approve a $100,000 contribution from below market rate affordable housing funds or, if available, general fund human services grant funds to earn-in for a no interest and no fee non-recourse advance renters assistance program to assist tenants at risk of eviction due to impacts of COVID-19. And finally, 7, authorize the city manager to negotiate and execute a $100,000 contract with earn-in. And that is my motion. I will just say, prior to our collective discussion on it, this is not a lot of funding. I think that the $150,000 was modest given the scope of this crisis. And I think that to the extent that Mary West could potentially help that many more people with respect to their program, I think earn-in could potentially help even more than that. But it's an interesting, compelling model, and I really appreciate everyone's willingness here to give of their time and their effort in order to help alleviate, to the extent that we can, this crisis. But $150,000 versus $300,000, it is not by any far stretch monumental amount for the city of Cupertino, but I think it can help a lot more people than merely the doubling of this budget. Thank you very much.
Okay. Leon, you may speak. Leon, if you unmute yourself.
Okay. Sorry, I have a question, or do you need the second first?
I don't know. I would not second that motion, but
well, I would certainly appreciate a second.
Me first ask. So, West Valley 100,000 is a grant program, and Mary West and Earning both 100,000 are loan program, right? We are expect them to return the money to the city, right?
When debt doesn't go bad, yes.
The earning is also a kind of a loan program and the advance program. And as I understand, that they have even higher return rate than the credit union. So, and both of these would be available for only Cupertino residents. Is that right? I think I heard that.
Yeah, both the advanced
confirm
and
that.
the loan programs are.
So both
Cupertino only.
Mary West and the earning program will be only for Cupertino residents. Is that what you in your proposal?
Yes, I
Okay.
did put that qualifier there in, and
Yeah,
I believe-
but the West Valley one is where I'm a little concerned because I am willing to go up to 100,000, provided all the other cities match our contribution proportional to their population. Because hearing that Los Gatos only contribute 10,000, is it? And 5,000 from, of course, what's that? They are a very small city.
Montesino.
I'm concerned because that money won't just go to Cupertino residents. We'll be serving all of West Valley, which I would support, but it needs to be a collaborative effort. So I hope that maybe we can allocate 50,000 now and then encourage other cities to match and 100,000 proportional to that, then we would also go for 100. We can authorize the city manager to go for 100,000 if we get a match from the other cities. That could motivate the other cities to raise their amount too.
Can you make that a friendly
So
amendment?
yeah, I guess this is a friendly amendment to add a condition to the 100,000 to West Valley to allocate 50,000 now and direct the city and then authorize the city manager to go up to 100,000, provided the other West Valley cities match the amount proportional to their population.
I don't think they're going to do that, but anyway, so I personally,
That's more fair.
I'm not in favor of the earn-in program because they don't do loans. I'm fine with the 100,000 for Mary West and the 50,000 for West Valley now. And once we got the CDBG money, come back with more money for West Valley. But I mean, I would not vote in favor of this motion.
What do you mean earning program doesn't do loans?
Right, they don't do loans.
100,000 is not for them for service fee, right? They will charge you zero service fee.
Right, but they don't do loans.
But then the 100,000 will be available for people to get paycheck advance.
Right, but if it's a paycheck advance, they don't need the 100,000 from Cupertino.
No, it wouldn't be a paycheck advance. It would simply be a non-recourse advance, and collection on repayment of the advance would take place. It would, in effect, be identical to what Mary West is trying to do, except without the potential hit to your credit score, as well as the, albeit very low interest. So,
and there's no qualifications.
It is theoretically possible that the earn-in will recoup more than what Mary West ends up recouping, because we're not requiring repayment under the Mary West program either. You look at the terms of it, and basically the city of Cupertino is on the hook. So theoretically, all $100,000 could default. That's
not accurate. We are requiring repayment, right? We're prepared that a certain percentage of it is going to be in default.
But we are guaranteeing that payment. We are guaranteeing that repayment.
Right. We're guaranteeing it, knowing that a certain percentage will be in default and that a certain percentage will hopefully be repaid. With the earn-in, there's no compulsion to repay anything.
But I think earnings that they have good record that people have been repaying. But maybe it's a new program. How about we maybe reduce the amount?
They have a good record that they have a good record of repayment because they only give these advances to people that have jobs and that have income. If they just gave it to anyone, they wouldn't have a good.
So my understanding is earning will only give this for people who had job before, right? They just need
Not the money we're supplying, the money that they give for the payday advances, right? And you have to have a job.
I'm sorry, but
Okay,
I don't think the terms of the Mary West thing require anybody having a job right now. I think the whole point of this program is taking care of those people who are underemployed or unemployed altogether, and that's what I got from Mary West. We're going based on, you know, their income history and their ability to pay under normal times. We're not, you know, trying to provide permanent assistance here. This is an emergency allocation. I'd offer a substitute motion that we fund Mary West to the tune of 150,000, and we drop substantially reduce the credit requirement.
And what about for West Valley then?
I'd say that we see what comes from federal funding for West Valley, but in fact, right, I think the Mary West program can cover anybody who needs rental assistance.
Well, we do know we're getting the 200. How much is it, Carrie? 233,000.
It's 229,000.
So that, I mean, we're getting that. It's just not here yet. Is that an accurate statement?
Correct. It is an allocation. We don't have to apply. We are an entitlement city through community development block grants. So we are guaranteed these funds.
So let me understand correctly. How could these funds be used? For what purposes? Anything?
Carrie?
I will be bringing back full information about the CARES Act funding, but emergency assistance funds, assistance with food distribution, public safety, hotel vouchers for homeless folks that need to isolate or get out of an encampment. There's several uses, but basically it has to serve low to moderate income folks that have a COVID-19 impact.
Yeah, I mean, honestly, if I think about this, given occupancy of our hotels, which I'm told is perhaps 10%, and other things, I really wonder, right, if we can be, when this gets brought back, we can have that discussion about the most effective and most impactful way to help those folks that are stressed at this time. But I mean, for the money that we would allocate now, I think the loan program is most effective, and for the reasons I've stated, I think we can help. You pick your number on the default rate. If the default rate's a third, we can help 3 times as many people. And I realize that some people won't be able to repay, and I'm okay with that. But I think to help people, you know, to give them a reason to repay if they can, just makes our money go a lot further. And this isn't money we're donating from our own pockets. This is taxpayer funds, and I think we have to be mindful of that.
Yeah,
if we fund, you know, 15 people, or we fund 30 people with 100,000, I think the need is going to, based on what we've seen in Mountain View, the need's going to go beyond that, and we're going to have to be prepared to have this conversation again and again. And so, I think the need is going to go well beyond what we could do with West Valley for 50 or 100.
So for a third motion, I would motion the 100K for the Mary West program and 50K from the CDBG money for West Valley, which I think is where we started.
Okay.
This whole thing earlier was 100K for Mary West and 50K for West Valley. And I'm very leery of doing this a loan program with earning, because it's not really a loan program.
Right.
And
I'll second your motion, Stephen.
Can I get some clarification from earnings on REM? Can I get ask, because and unfortunately we don't have a lot of details on the earnings program. I wonder if they can match what Mary West's requirement is, so that we can have more clarity on who might qualify for the program through their platform.
We could mirror what Mary West's model is, the only thing that we would not do is pull the credit score, but we could do the rest. I think the other thing that I would add is it feels like a big concern is the repayment rates on a loan program versus an advance. My strong belief is that because of all that we offer, people actually stay with us much more. That I would be willing to bet the city that if we did the equivalent program with Mary West, our repayment rates would be higher. And I would put 10,000 of my own money up as a bet to see where we have better repayment rates.
So you mean there are multiple other requirements in the Mary West program right now, so you can qualify applicant for all of that except the FICA score.
Yeah, we actually get insight into their spending habits, so we could see if they're paying their utility bill. We can see what their direct deposits are. We have APIs that give us that data, so we do a lot of verification automatically in the system.
Oh, you do a lot of other verifications.
Yes. Yeah. So we actually can see their utility bills. We can see we can see what their spending pattern is. We see what the history of employment is. We know what their attendance records are. We have a lot of information that actually helps the whole system work much better.
So what would the money from Cupertino do? I mean, it sounds like you can do this without us allocating any money to it.
We're already doing it for 1,000 people in Cupertino. We're doing it at $100 a day. So it doesn't help if they have to make a big rent payment. Like we don't do 3,000, and we're not set up to do that. We have several million people who use the platform, and we're not set up to do it at that high dollar amount. So we go from a minimum of $1 to $100 typically. What we could do with Cupertino is give out the higher dollar amount. We came to this more as like we have the platform. It's really easy for us to do it. There really shouldn't be any cost to do it. We know we have lower loss rates than any bank or credit union, at least on our core product.
Right, but this is very different than your core product.
Correct, but which is why I can see that you're concerned about how much would come back. I'm confident.
Right. I mean, I'm not interested in having a wager of $10,000 with you or anyone.
Yeah, I would stand behind my platform, is all that I'm saying.
So this is Deb. Can you hear me?
Yeah.
Just one little snag that I needed to give to Ram too, is that if there are CDBG funds or the grant money funds that are available, you would have to somehow be able to screen for 100% AMI before you could allow those grants. So I'm just saying that in that if council's considering kind of where the money's coming from, that's the requirement for some of the more, the money that's not really ours. Did I say that right, Carrie?
Can I ask another question?
Sure, go.
If we give people 3 different ways of getting rental assistance, could somebody who is enterprising go and exercise all 3 of them?
Do
we have any mechanism that would say, okay, do the one or the other? I mean, if that's not our intention, I'm really concerned about us, offering 3 ways to do this. I think the messaging for the folks that are affected has to be simple. It has to be something that works for people that maybe aren't so technology challenged. And the more options we put on the table, I think the more challenging it is for somebody to contemplate. But specifically, I'm asking city staff, if we went with 2 or 3 of these options, could I, as somebody in need, apply and receive city funds effectively from these 3 different paths?
We would need to look into ways to monitor different funding sources towards each other. But what I can say, especially after talking with De Anza College, and they identified their strong need is emergency assistance funds. They're sending their students over to West Valley because their students are services and gig workers. And so
we haven't told them about that there's any program at Mary West yet, right? Because
what I think would happen in a situation like this is the need is so great, you will see people seek as many funding sources as possible because they're trying to keep their homes.
Yeah, I don't think there's anything necessarily wrong with getting the grant from West Valley and then then applying for a loan from Mary West. You know, if they qualify for both, that's fine. Anyway, did anyone second my motion? I don't remember.
I did, Stephen.
I have a friendly amendment to your motion.
Okay.
And, I would support this, and my suggestion is that we allocate 50,000 for an earn-in program, and you're keeping West Valley at 50. If earn-in ends up performing, you know, similar, and I agree with your sentiment regarding the $10,000 wager, except that I would say if the wager was lost, put it back into this program, you know, give it to West Valley. But my suggestion is that if it does turn out to be an effective program, they have a member list, they have an outreach mechanism built in to their model. And so I think even if you do have overlap, you're going to reach more people in need this way. So I would say make the total allocation right now 200. Make it 50 to West Valley, like you're saying, 100 to Mary West, like you're saying, and put 50 in earn-in. Let's monitor this. Let's revisit this in a month or 2 months when we have some data to see if a further allocation would be warranted. To me, that's what I could do with.
Okay, so that's fine with me. I'm just not sure what earn-in does with the. I mean, what is our money going to earn-in? Is this a loan guarantee, or what exactly are we doing?
This is a non-recourse advance guarantee. So essentially, they're doing the same thing that Mary West is doing. They're trying to get the money that they divvy out back. But it's not called a loan. There's no interest on it, and there's no fee. So, you know, that's the functional difference.
I think I see the difference a little bit different. It isn't Mary West using their own funds, and that we are the backer of their loans.
No.
No?
Yeah, we're guaranteeing the loans.
Right. So
by putting the
Our
money
fund, right?
in their account.
Isn't that our fund? They are just helping managing it.
No, we're putting money into a share account at Mary West as a loan guarantee for the people that default. It's not our money that's being lent out. I mean,
But they're
essentially.
not letting out more than the amount we put in anyway.
Correct.
correct.
So it's basically still our money.
No, it's not. But so
how is it not our money? I don't understand.
Darcy, with the earn-in program, the other thing I wouldn't want, I wouldn't want all 3,000 given out to somebody at once. It should be metered out, and then to see how if they're actually repaying, because that's probably how their payday advance works too. If you don't pay it back, there's no recourse, but you don't get another one. Is that true, Ron?
Good point, because they now only are doing small amounts. Maybe we can do like 1,000 first, and if they do
So Ron, is that practical?
Ren?
Yeah. I mean, 1,000 is practical. You'd be surprised, but people take $1 from us or $2 from us every minute.
Right.
We're set up to do small dollars as well.
Right. I'm just concerned that we don't want someone saying, hey, I'm going to come take all 3,000 and there's no recourse. I'm done. You know, if
we could
taking a small amount, if you're taking 500 and then you see if they're paying it back, that's much different. There's a lot less risk then.
Correct.
Really,
more people if you wanted to give people only 500, but if you want to give people money for rent now when they have an issue, you need to give it to them when rent is due.
Right. No, I'm not saying 500 period. I'm saying 3,000, but they don't get all 3,000 at once. Because, you know, yes, they have rent due, but they are going to have other income as well from unemployment, you know, whatever, to help make the rent. So we don't have to supply the complete amount of rent for 1 month. I mean, if we want to spread it out over 2 months. So it something
Yeah.
like that.
Yeah, we could help them with part of their rent. So it could be like they're putting in some of the rent and we're putting in the rest of the rent to make up for it. We could also, if you wanted to just do what Mary West did, we're pretty flexible on how we do it.
Okay, so I can support Darcy. Yeah, I accept that friendly amendment. So
what's the motion now? Can you rephrase?
I will say this second, which should consider whether to accept the friendly amendment, which was Councilmember Sinks.
No, I do not.
Oh, so you do not accept the friendly amendment for Ernan?
That's correct. I think two is the two sources of funding is the max I'm willing to go.
You know, I agree with you, but if we don't, you know, I don't know how else to get this thing through.
So I can go ahead and do a second then, so that we can move.
You are seconding Rod?
No, I'm seconding Darcy's 50,000.
Motion now.
He's seconding Darcy's amendment.
Yes.
To add to my proposal for the motion I had was 100,000 for Mary West loan program, 50,000 for West Valley grant, and then Darcy's friendly amendment for 50,000 for earn-in.
And I'll second that.
I think another thing to do is withdraw that motion, make that motion you just described, and then John can second that.
Okay.
Okay.
Okay, so my motion is 100,000 for the Mary West loan program, $50,000 grant for West Valley Community Services, and preferably money that comes from the CDBG, and then 50,000 for the trial of the earn-in program.
And I like that you said for the trial of the earn-in program, and these are very difficult times. I second that.
Yeah, but I think I hope that maybe next council meeting or so, we will see more detail on the earning program, how they qualify the applicants.
No, that's up to us.
I think city manager will figure that out.
Right.
Yes. Yeah, okay.
May I also, I'm
Yes.
sorry, clarify which funding sources are being used for each of those three allocations? The staff report had an option of 2 different funding sources for the West Valley and Meriwether, and I'm not sure Mary West, and I'm not sure which funding source is being proposed for the third to earn in. So I think that would be helpful to staff to clarify. And perhaps our program manager can confirm that those funds are available.
Yes, thank you. We can fund emergency assistance funds through the below market rate affordable housing fund or through the general fund human services grant. We can make it a one-time increase to support this program.
Well, I mean, no one ever applies for that below market rate. That's to build BMR housing, right? Is that
It's for a variety. All uses must benefit affordable housing in some way, either through development, acquisition, fair housing.
Right, but isn't that the fund where we always have that money and no one asks for it?
Yes, it's
right.
We have our last loan out of that fund was the veranda, so we haven't had a project come through yet.
There's not really enough money in there to do any significant project, so I would favor taking it out of that fund. So that's my motion, to take the money out of.
But I thought we want to keep that for housing, the actual housing.
Well, this is an emergency and no one applies for that money is the problem. Every year.
Stephen,
why nobody wants it.
You grow that over time so that you do accumulate enough so that
Eventually.
you can build the housing. I mean, when are we going to build the housing?
Right, it costs.
Yeah, I would rather keep that. And as long as we have other funding sources, and because Next
Harry, can you
meeting,
explain the
someone
advantages and
has it.
disadvantages of funding from each of those sources?
You know, I think they compete against each other. The general fund has its own uses and restrictions, and the below market rate affordable housing fund is really tied to affordable housing. And when we looked into this, there is a nexus to use it for the emergency assistance fund. So I think council's there.
Yeah, we can't hear you.
Yeah, now your transmission is not good.
Can we make it in accordance to what I was suggesting in my original motion, that we make it BMR affordable housing, or if available, general fund, human services grant funds? I think that would resolve.
Yeah, that's fine. But I did want them, if possible, the grant money to come from the CDBG money, because that we would have to use up for something. We have to figure out how to use that.
You know, I know that we haven't had the full discussion about the CARES Act at this time.
Yeah.
But it would be in the city's best interest to fund one agency with that pot of money, if possible, because of the strict monitoring and regulations.
Oh yeah, that's a good point. Yeah.
So how much are we getting from CARES Act?
229.
229 for one agency.
Well, I don't know if we have. Yeah, that's an issue.
Then it seems like only West Valley would be large enough. Then should we fund the 50,000 now, since we might be funding all 229 later?
So I can add, go ahead, Deb.
Well, so what I would recommend to council is let's try to not think about the CDBG funds, and maybe you could, what I would probably do is try to go to the most narrowly used fund first in order to fund our renters assistance. I'm not saying it exactly like Harry does, but since she knows what the limitations are, you can rely on staff and I to figure out which funds are the best for which one, and we'll I'll come back and tell you what I've done, but maybe just leave it to me to figure out which funds are best for which program.
Well, Heather, do we have to specify it in the motion?
You can authorize the city manager to make a selection between those two funds for the 3 different sources, if you like.
Well, you know, I'm certainly not qualified to make that decision. So I would defer to the city manager and to Carrie, you know, to work together. I don't know about anyone else, but I don't know enough to make a good decision between those funds.
Okay, so you're okay with identifying those two funds and leaving it to the city manager's discretion?
Right. Yeah. I mean, yeah, I just don't have the knowledge to make it would just be a crapshoot. I have no knowledge on how to make that decision.
Can I make a very tiny, small amendment, friendly amendment regarding the late fees for Mary West? Can we try?
Well, no, you can't, because those are going to be worked out. We have not determined any late fees, if any.
You're authorizing the city manager to further negotiate.
Authorizing the city manager
She's going to negotiate.
Lower late fee.
Yeah, I agree that, you know, late fees should be minimal. But yeah, this is not really part of, because we don't know the terms at all yet, really. Those were just samples that.
Or maybe some softer terms for late payment, if possible. So authorizing city manager to negotiate.
Right.
Can I call the question and ask for a roll call vote, please?
Sure, great. Kirsten.
Councilmember Chow. Councilmember Chow.
Oh, aye.
Councilmember Sinks.
No, for the concerns that I've previously stated.
Councilmember Willie.
Yes.
Vice Mayor Paul.
Yes.
Mayor Scharf.
Yes.
The motion carries with Sinks voting no.
Oh my goodness. Okay. We are, let's see. I got to go, sorry, I got to go back to the agenda here. Agenda. Okay, well, I think that's all we have then.
Thank you.
Okay, thank you, everybody. The meeting is adjourned.